We're glad you're with us. This is the Retirement Education Hour. Welcome into the program, everyone. I'm Megan Mozak, and it's always a pleasure to be alongside financial instructors Kirk Cassidy and Michael Masserant. And we have a great program lined up for you today. As always, we focus on retirement planning and what it takes to retire successfully and stay retired here in the 21st century. I can tell you this, it does not happen by accident. The good news is Kirk and Michael are here, and they'll be sharing their wisdom with you throughout the hour. We'll also be telling you how you can get a front row seat. You can reserve your spot for these courses that are taught by the Retirement Education Foundation. You know, the foundation really does make it its mission to educate you around all things retirement planning to give you the best advantage for success. So be listening for that. And keep in mind, this very program and so many others like it in our library, they're available to you wherever you find your podcasts. So be sure to search for the name of our show, which is the Retirement Education Hour. And I'm excited to dive in this hour with you, Kirk and Michael, as we talk about control. You know, everyone loves control. And there are some ways to gain control, but there are also some big mistakes when it comes to retirement and trying to gain control or pulling levers that make us feel like we do have more control. Let's talk about that today and some of these missteps, because we certainly don't want to make those on our road to retirement, do we?
Well, I think what happens is when you're going into retirement, in the hope and the search of control, what we find, remember, we're a national charity. We teach these 8-hour almost master level courses at universities around the country, major universities. And we've been fortunate enough to teach over 10,000 people now. And we see patterns. We see a lot of consistent patterns, particularly with the demographic that attend our courses, right? The people attending our courses aren't typically the average baby boomer. They think they are, but they're not. See, the average baby boomer only has about $200,000 saved for retirement. 40% of baby boomers will get almost 100% of their income from Social Security only. So most of the people attending our courses and listening to our radio shows, they tend to have a lot more resources than that. 700,000 to 20 million is typically who attends our classes, who are typically listening to our radio show, and their sense of control over their lifetime has been the management in being fully in control of their finances. And so they have a false sense of control because they can't predict stock markets. No one can. They can't predict who's being elected or not being elected. They can't control the things that they've ultimately been able to control to this point in their lives. See, in this point of their lives, they could control most people can control if they have a job. They can control how much they're saving. But see, now you're starting to spend money, and there are so many more levers. The things that drove them to have the success to get them to this point and to give them the control to get to this point will not be the same things that will give them the success in retirement. And so in this search of control, they tend to hold on to more things and don't recognize there's going to be time that they're going to start needing help. And the help is now, Michael.
And really, for a lot of those people, it comes down to analysis paralysis. They start to dive into all the different things they can do or they can consider, and they get overwhelmed with all these different options that are presented to them, and they can't pick anything. And so they just default to, what is the safest thing I can possibly do? And that's when people start to default to working longer, spending less, and the fear starts to really dig into their mindset, and they start to make decisions from a place of fear instead of a place of confidence.
Yeah, fear starts to significantly increase as we approach retirement. There's a lot of reasons for it, but one of the reasons is someone else isn't going to send them a paycheck anymore every single 2 weeks. Now they have to send their own paycheck to themselves. And this is when things start to spin out of control. And the interesting part is they try to grab onto and hold on to more things, and they shut down more and more and more as they age. This is one of the reasons the charity teaches these 8-hour courses. They're almost master's level courses taught at many different major universities. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
And in terms of that analysis paralysis, again, back to your point about how we have a pretty good handle on who comes to the classes. We tend to have a lot of engineers come to the class.
Tons.
And engineers are sort of infamous for being do-it-yourselfers because they're really well trained when it comes to making logical decisions based on math. And they look at money and they see a number and they think, oh, money is math. And I'm really good at math. I'm great at projections and break-even analyses. And so they start to break all their dollars down based on the math they've been doing for their job for 20, 30, 40 years. And they've been very successful at for 20, 30, 40 years. And again, they start to get overwhelmed by, oh my gosh, there are all these different options, all this different timing. And they start to realize once I start pulling these levers, making these decisions, some of these things I can't undo. And so they look at the downsides of the what ifs, and the fear again starts to really drag them down into, well, I'll just work longer, I'll spend less, because by working longer and spending less, they think they have more control. It gets back to that feeling of control again. And it's not. If you're working longer and spending less, just in case, you're not in control. The money's in control of you.
Michael, that was awesome because, look, control should be defined as you're approaching or in retirement as freedom. That's how you should define control. The more freedom that you have to spend, to do the things you want to do, when you want to do it, how you want to do it, that is control. That comes through freedom. And the only way you can get there is to accept that you don't know what you need to know to execute this phase of your life. I'm telling the listeners right now, and I'm going to offend people, you are going to way underspend what you otherwise should spend. You're going to have a lot less freedom in retirement, so a lot less control. As you age, it will get worse. Old people aren't sheep. They get scared. It's all about fear, anxiety, these emotions that prevent you from having the control you seek in retirement. It's a whole new phase of your life. And it's not an accident. The classes are 8 hours in length. We teach these classes over 2 evenings or 1 full Saturday, and we're not exaggerating. This is like a master's level course. It's an advanced course to help you to understand how to gain control in retirement. And we teach these at major universities and colleges in your areas. So if you'd like to register and you'd like to attend or learn more about the courses, go to retirementplanningedu.org. That's retirementplanningedu.org. All we ask is for you to make a $29 donation to charity to attend these courses. We stream them live directly from the university if you can't attend in person. Thanks for listening to the Retirement Education Hour. Be sure to follow or subscribe when listening on Spotify, Apple Podcasts, or wherever you listen to your podcasts. And now back to the show.
Want to get back to this topic at hand. We're really talking about control. Who doesn't love control, right? But when it comes to retirement planning, there's a mindset shift that has to happen. And what you think you might have control of, you actually may not. And my eyes are getting wide open here on this topic for sure, Kirk and Michael. I also want to remind our listeners, if you missed something at the beginning of our show, you wanted to go back and re-listen or maybe share this with a friend, a spouse, you can do that and find this program and so many others in our library, wherever you locate your favorite podcast. You just have to search for the name of our program, which is, of course, the Retirement Education Hour. I want to talk about a feeling that I think a lot of people want, and they want some control over the markets, Kirk and Michael. And I would love for you to weigh in on our ability to time the market. Is that even possible?
Well, yeah. No, so it's an illusion to think that you can control the stock market or even predict future events around geopolitical issues, your own personal health, your spouse's health. That's an illusion. You think you have control, you have no control at all. In fact, not only do you not have control, the biggest institutions, financial institutions, that this is all they do and have teams of experts doing it, they can't stock pick and market time. I know Berkeley, and we keep quoting the study, Berkeley did a study saying 1 out of 100 traders will beat the market. 1 out of 100 traders beat the market. You can't, our industry hates Remember, we are a charity. We're a national charity promoting education to help people have more control in retirement and to avoid these mistakes. So the industry hates when we tell some of the stories. And the story, in our very strong opinion, is it's very fraudulent. It's very much a business for them to earn money, not to help you protect your money and give you best outcomes. I'm sorry.
Well, that is, there are so many different stories. The study you quoted from Berkeley is saying that 1 out of 100 traders can beat the stock market. That's in any given year. Yeah. What are the chances that 1 out of 100 people can do it year after year after year?
Oh, that's a great point.
It's not going to happen. If you get lucky once in a while, that's fantastic. It's not repeatable. And this is, people will do all the deep dives on the analysis and the history of the stock market. And they'll say, well, the stock market on average every year goes up 10%. That's true. But 1 year out of 4, we have a negative year on average. Every 4 years, we have 1 or 2 years that are negative. Throughout the course of the year, the market dips on average 14% at some point during the year. So even if it ends up positive on the year, it's down on average 14% at some point in the year. There are so many pieces that hide in the details that people don't have a good handle on, and they think they found a newsletter or a stock picker that can guide them through this.
Kramer,
yeah. I always roll my eyes at him. My personal favorite example is there are hedge funds that pay for satellite image data of parking lots, and we'll use a local store, Kroger. So they'll pay for satellite image pictures of Kroger parking lots. And with those pictures that they're getting from satellites in space, they're counting the number of cars in the parking lot. They're trying to estimate how full the carts are, to estimate how much people are spending at Kroger that day, that week, that month. And they're comparing that data to the prior quarter to get a sense of, will Kroger's quarterly earnings conference call be good or bad? Will the stock go up or down? So they have all that data from pictures where they're counting the number of shoppers in a parking lot, from satellites from space, and they still get it wrong.
More often than not. The industry.
And so the person who has
a scam. I'm sorry, I hate to say it.
Their Yahoo Finance tab open or their Morningstar tab open, and they're trying to track, historical PE ratios versus current PE ratios, and they have a great product coming out. No one knows anything.
But they've all done well over the last 20 plus years, Michael. So they think they know something and they don't. All they had to do 20 years ago is take $1 million. If they had $1 million, instead of trying to do all their analysis and stock picking that so many of you listeners are very proud of, if you just took those dollars and bought the S&P 500, if you took $1 million 20 years ago, it'd be worth $6.5 million today. None of you have beaten that. You're not going to beat the index. In your stock performance, your investment performance isn't what's going to drive success in retirement. It's not what's going to give you control. Control is freedom, not performance. Performance isn't even what's going to maximize your income. You guys don't understand even how to drive success in retirement. That's the reason the charity exists, is to teach you, to wake you up, because you have been brainwashed and conned by the financial service industry that focus on performance, focus on performance, focus on performance. Don't spend your money. Only take out 4% a year. Work longer. Spend less when the market goes down. If you don't like who's being elected, don't spend the money. Of course they don't want you to spend your money. The less you spend, the more they make. There's no incentive. What is the incentive for the people that are giving you advice to convince you to have freedom to spend more and to give you control to go do the things you want? What incentive do they have? And you, as you age, you think you're going to feel comfortable managing your anxiety when you have to pay yourself? You won't. We're telling you, we've taught tens of thousands of people now. Come to an 8-hour course. We will teach you what a real retirement plan looks like, and then how to find the right teams to help you. We will give you the information you're looking for. All you have to do is make a $29 donation to charity to attend one of our 8-hour courses. Go to retirementplanningedu.org. That's retirementplanningedu.org. Listening from outside Michigan or Missouri? We stream courses live from the university so you can attend anywhere in the country. Go to retirementplanningedu.org. That's retirementplanningedu.org to sign up. And now back to the show.
Today on the program, we're talking about control, how much control you want, how much you have, and what you really should be looking at as you think about this topic as it relates to your retirement planning. I want to talk about a very common thing that I know the two of you see. What better way to have control over your retirement than to plan it yourself? You know, Kirk, Michael, the DIY approach. What's wrong with that?
You know, it's funny, Megan, the people who typically attend the charities courses and often listen to the podcasts and the radio shows in some of the different states we're in, they're often DIYers. We find that $1 to $10 million family tend to be DIYers, right? They don't have enough money to really get more than just the generic, and I'm not picking on anyone, but the UBS, the Merrill Lynch, the Ameriprizes, the Edward Jones, the Raymond James. They don't get the family office advance advice and strategies because they don't have enough wealth. They can't charge those people enough money to really do the advanced type of planning. So people in that 1 to 10 million, they tend to be highly educated and they're like, I can figure this out. And they stumble their way and they do a good job of saving, they're disciplined, and they amass some wealth. And the problem is, as they're aging, cognitively, things are declining. They're starting to lose control. Someone else is not going to be paying them a paycheck anymore, and they have to pay themselves. There are variables that they are unfamiliar with, not prepared for, and no one is talking to them about. And that DIY approach is going to fail them in retirement. It's going to fail them. They're going to spend less. They're going to work longer. They're going to pay more in taxes. I will guarantee that. I will guarantee if people come to the charities classes, they will spend more, they will pay less taxes, and they will retire sooner, and they'll have more control because they will have freedom. But Michael, I know that you wanted to jump in because you had some thoughts around this. Go for it.
Well, it's always interesting. We've taught so many people at this point where we've heard every do-it-yourselfer speculation about what they're going to do in retirement. And time again, it's up to us to try to coach that out of people at the classes to help them understand, no. You're not the first person to think that you've cracked some code here and here are the pitfalls. So I thought it'd be fun to just kind of throw out a couple of common examples that we get.
Go.
And you can tackle, all the reasons why it can't work. So we hear people all the time say, well, the stock market averages 10% per year. So I know I can't use 10% in my projection analysis. I'm going to do it yourself, or I'll average 7% per year in my growth rates.
Michael, I can show you how you can have an average 7% rate of return over a 10-year period of time and you lost money. See, there's something called sequence of returns risk. That is the number one risk to your retirement, and it is the number one driver to success. It won't be your average rate of return. It won't be your performance. It will be, where do I take my income from? Where do I take it during different market conditions? When the market's up, where do I pull my money from? When the money's down, where do I pull my money from? That is what's going to drive real return, and that's what's going to drive success.
Okay, well, if you're telling me that I can have a positive average return but a negative real return, that sounds scary. I'll just leave my money in cash then.
Well, that won't keep up with inflation. Look, in the class, or go to the website, you're going to see the charity's website. We use like a 3.5% growth rate for a 30-year retirement, where someone that retires with $2 million showing a projected growth rate of about 3.5%, but we're able to take out $160,000 a year, increasing every single year for inflation. That's an 8% withdrawal rate, only using a 3.5% growth rate throughout retirement. But if you're managing sequence of returns risk, and you don't just keep your money in cash or CDs, but you have your aggressive money for dollars you're not touching for a long time. It's all about dynamic income distributions. That's what it is. It's not market timing your investments. It's market timing your distributions, Michael.
Okay, fine. Well, setting the investments aside, I want more control over my taxes. So I'm going to Roth convert all of my IRAs in the next 5 years, all of it, all my IRAs in the next 5 years, so that I can control my taxes for the rest of my retirement.
So, Michael, this is an area not just DIYers get wrong. The whole financial service industry is doing it wrong right now because everyone knows that you, the consumer, are irrational when it comes to tax dollars. You guys are irrational. You buy things and want to buy anyone that says, I got a tax strategy for you. So the idea you're going to Roth convert all of your money or Roth convert, fill a bracket, you can take money out of your IRAs and your 401ks and never, ever, ever, ever pay taxes on them if you know when and where to fill your brackets. The government allows you to have if you're married filing joint, over $30,000 of taxable income a year. In our class, we teach you how to do this strategically. It's a math problem over the next 25 years of your retirement. How do I pay the least amount of taxes over the next 25 years? To do that, you have to run hundreds of iterations, modeling different Roth conversions, different filling of brackets, different timing of recognizing your capital gains, different dividend rates, different interest rates, how much money should go. It is a puzzle, folks. In the class, we teach you'll save hundreds of thousands of dollars in taxes if you just know the long-term iterations to run. It's complicated, Michael. I mean, I know I took more time, but look, maybe we play this game in the next segment, because I know this is the things that people are thinking. You need to attend this 8-hour class. I mean, it is like a master's level class. That's why it's taught in universities and colleges. That's why we stream them live when we are teaching at the universities, because we have people all over the country listening to our podcasts, and we might not have a university in your area. So all you have to do, go check out some of the webinars on the charity's website, and then go register for a class. All you have to do is make a $29 donation to charity. If you'd like to register, go to retirementplanningedu.org.
Classes are forming now. Go to retirementplanningedu.org to register. Again, that's retirementplanningedu.org. Use the promo code PODCAST to receive 50% off your tuition. And now, back to the show.
We were talking about DIYers, people who say, you know what, I'm pretty good at analytics and I can make a pretty dangerous spreadsheet. I'm great at math. Why shouldn't I plan my own retirement? Kirk and Michael, you've given us some compelling reasons why DIY, why that approach might not be best. What else on this front?
So look, and I'll keep saying this probably every segment, we are a charity. We're a national charity. Our foundation focuses on advanced retirement planning strategies, helping people to gain freedom, gain control in retirement. And a number of ways we accomplish that in the 8-hour class. But the luxury of doing this for way over a decade now, teaching over 10,000 people, we have heard every DIYer system, process, what they think they're going to do, what they've read, every book, every expert. We study the industry, to such an extent, we know what they're telling you. And what we know is the less you spend, the more the financial service industry makes. We know that. So our goal as a charity is to show you how to spend more, retire earlier, and pay less taxes. And if you're going to try to do this yourself, we know 10,000 people, we've seen this. You're not special. We've got all the engineers, CFOs for Fortune 500 companies, pension fund managers. We have them all coming to our classes, econ professors from the universities coming to our classes. Doing this yourself in retirement equals more fear, more anxiety, less spending, more taxes, less freedom, less control. Michael. Go.
Here are a couple more examples, more things we've heard from the do-it-yourselfer. So, the person who I don't like has been in the White House for the past 4 years, and they've been spending like drunken sailors. And now inflation is going to be rampant for the next decade and a half or the next 2 decades. So I'm going to use a 4% inflation rate on my income targets.
Yeah, see, inflation's a great one with DIYers, especially recently, right? Everyone is so fearful. And again, the financial industry promotes that fear. Yes, you should use 3, 4, 5% inflation in your retirement plans so you spend less and we make more. And here's a fancy little annuity you can buy that increases for inflation to protect you. They do these silly things, and you DIYers who are building your retirement plans assuming 4% inflation rates is crazy, because we know we have the data. We have all the data. The government provides us the data of spending patterns. We know how you will spend in your 60s, 70s, 80s. and if you make it into your 90s and it falls off of a cliff, you will not have the same lifestyle in your 80s that you had in your 60s. You are missing the boat. That's why you're going to underspend and work longer than you need to if you're trying to use 4% inflation numbers. You don't need to.
Well, it's funny you say that because, okay, fine. If you think I'll work longer than I have to, I'll work as long as I need to. I'll work until 65, 67, 70 years old if I have to.
Well, how do you know when you have enough? Who's going to convince you have enough? Because you're going to get a dial of probability of success, or you're going to go online and use a calculator that says, oh, yes, you have an 80% chance of success if you're 65 years old and you only withdraw 4% a year out of your savings. That is half of what you could. If you're 65 years old, you can take out 7-8% withdrawal rates if you do this right, with a 0 chance of outliving your income. DIYers will spend less using online calculators and using general rules, and you will pay more taxes.
Well, I thought, so you missed one there. I thought you were going to say that only about 40% of people get to pick when they retire.
Oh, that's another
A lot of people don't get to pick when they retire because of health issues, or they get laid off, or family gets sick and they have to leave their job to take care of family. Most people don't get to pick when they get to retire.
Oh, especially in Michigan, age discrimination, ageism is a massive issue, especially in the automotive industry. Just look at all the class action lawsuits.
And, the last thing we hear from a lot of DIYers is, I'm really concerned about, I don't know how long I'm going to live for, and I don't know how much I'm going to need for long-term care. So I need to have millions of dollars left when I'm gone to make sure I'm taken care of.
So here's the crazy part, right? They tell you to protect your principal. They tell you might have a health event when you're in your 80s and 90s. So don't spend less because you're going to need it just in case. Here's the data. For baby boomers, when you die, baby boomers, the research tells us you'll have 80% of the wealth you had the day you retired. So if you retired with $3 million, doing quick math, you're going to have $2.4 million still when you die. And our data shows, especially DIYers, and that $1 to $10 million families, it's millions of dollars. And there's a more effective way to protect yourself from healthcare in your 80s without buying insurance. You don't need to buy long-term care. There are strategies that can protect you if you are educated and you find the right teams to help you. That's the point. The class gives you the knowledge, the education to be informed enough to be able to find the right teams to help you execute this phase of your life. And there's not a lot out there. You really need to know specific questions. You need to know how to do background checks, how they get paid, specific scenarios you should be looking for. That's what the class teaches you. It gives you that ability, the filter, to understand the people that can help us have the retirement we want. You want control? Educate yourself. Attend one of our 8-hour classes taught at most of the major universities. If you'd like to register, all you have to do is make a $29 donation to charity. Go to retirementplanningedu.org. That's retirementplanningedu.org. To find our latest white papers and webinars, go to retirementplanningedu.org. That's retirementplanningedu.org. And remember to subscribe or follow wherever you listen to your podcasts. And now back to the show.
Kirk and Michael, as we talk about control in our retirement planning process, partnering with the right person, that's also an element of control, but I want you to explain why.
Well, remember, so I'll say it again. We are a charity, a national charity. So please don't kill the messenger, right? Over a decade of teaching 8-hour courses. They're taught over 2 evenings or 1 full Saturday. We've been doing this a long time. We've taught over 10,000 people now. Here's what we see. Many of you feel like you are in control because you have a team that's been helping you for years and that's helped you accumulate the wealth you have. And so you feel, I'm in control. I'm delegating to my team. This is my team, and they've done a good job. I'm in control. I feel good. So don't kill the messenger. Again, we are a charity. We're here to educate. That is our only responsibility, is to educate you. And what we're telling you is the majority of you who have a team currently will need to begin to transition to look for a new team. That's part of the course, is to help you identify what are the right things you should be looking for in finding a team. And what you're going to learn when you come to the class is your current team, if they are focused on accumulating your wealth to get you to this point in your life, they're likely not going to be the right team. In fact, I will tell you almost every case, they're not going to be the team that most effectively can help you transition through into the retirement phase of your life, the distribution phase. Now, I say this with a caveat. I am talking to that family with 700 to 10 million. You have very different strategies that should be deployed, utilized, and driven for you, that call $1 million to $10 million family versus that $700,000 or less family. It's less complicated. It's more using general rules. You, unfortunately, most of you are going to fall under these general rules. The 4% rule, you're going to get a dial of probability. They're going to give you an e-money or Money Guy Pro plan, a retirement plan, which is just garbage. It's just 30 pages of telling you the same thing, the probability of whether you're going to outlive your money or not by taking out 4% a year. It's doing nothing. You need a team that is purely focused on retirement. But you don't know what that looks like. You don't even know the right questions to ask. You should be so confident to know that I can retire now. I can have 6, 7, 8% withdrawal rates. I know where my money's coming from, which accounts, at what ages. I know if I have a long-term care event, where my money's coming from. If one spouse dies, where my money. I should know all of these things, what I'm paying in taxes over the next 25 years, not just this year. The plan we're going to teach you in the class takes 50 to 100 hours to build. Is your current team going to spend 50 to 100 hours building you an individualized, customized plan? They aren't, because they can't help all the other people manage your money, build your portfolios, amass wealth, deal with college funding, college planning, house buying, all the stuff that younger people have to deal with. Sorry, Michael.
Well, that is, the last two segments we talked about were more focused on DIYers who are really tuned into this stuff. And not everyone's like that. Some people say, no. I'm not a DIYer that's worried about all this stuff all the time. I outsource this. I delegate this to a team 5, 10, 15, 20 years ago. They've been my wealth accumulation team. They've got me. And that's all well and good for the wealth accumulation phase. But to your point, wealth accumulation is a very, very different endeavor than retirement planning. And people just don't know what they don't know. That's one of the biggest takeaways we've had from the people who come to the class, who aren't the DIYers, who have not spent hours and hours on their own researching this stuff, is they come away from the class thinking and telling us, I just didn't know what I didn't know. And I didn't know to ask these things. I didn't know that these things were out there. So my current team has been giving me for the past 5 years a dial of success, telling me that I am 78% likely to succeed based on my inputs. I gave them 6 input goals, and I'm 78% likely to succeed. I'm in their green zone. So they said, go for it. They said, I'm good. But I came to the class now, and now I have all these other questions I'm going to ask them. And then 9 times out of 10, they go to the team and ask the team all these different questions, pull how much income, from which accounts, at which times, in which tax brackets, when to turn Social Security, how to manage the pension, how to manage Medicare brackets.
Where do I take my money when the market's down? Where do I take my money when the market's up?
So now they're asking all these new questions that they did not know to ask before.
I don't want to protect my principal.
And the team says, whoa, you're good. The dial says you're in the green zone. Don't worry about these things. Well, you have to worry about these things, or a team should be worrying about them for you if you don't want to worry about them yourself, because just having a dial in the green zone is not sufficient, or should not be, I would argue, should not be sufficient to make such a monumentally important decision in your life.
Those people will work longer, they're going to spend less, and they're going to pay more in income taxes. That is always the guarantee, folks. Anyone that's been listening to our radio show, we've been doing this for over a decade. We'll make a $1,000 donation to whatever charity. How about a $2,000 donation to whatever charity you want? If after you come to this class, you don't feel much better prepared, spending more, paying less taxes, and retiring early if you haven't retired. Attend one of the 8-hour courses. There's no excuse. Even if you can't attend at one of the universities locally, we're streaming the classes directly from the university. So wherever you're at in the country, you can attend. Make a $29 donation to charity to attend. Register at retirementplanningedu.org. That's retirementplanningedu.org. Thanks for listening to the Retirement Education Hour. Be sure to follow or subscribe when listening on Spotify, Apple Podcasts, or wherever you listen to your podcasts. And now, back to the show.
I want to ask this question, Kirk and Michael, for people who are thinking about retirement and they don't like this idea of feeling out of control and like they can't quite, get a grip or get a handle on where they're headed with retirement. What's a great next step for those individuals?
Well, I'll say it again. We're a national charity. Taught over 10,000 people, all between $700 to $20 million of net worth in the family, most of them with 4 years of college education, most of them, not all of them. So highly educated people are attending our class. And what we know is the greatest way to gain control, you all know this, is through education, to understand something. The disconnect is education helps to give you the control, but control is not trying to do something that you weren't trained to do. It's the same concept of when you go to buy a car, you do your education, the knowledge, the research background, and then you go buy the car that someone else built. Or same thing if you have to have a major medical procedure or surgery. You do your education, your knowledge, what types of procedures, what types of physicians, who's the right team to do my procedure, and then you let them do the procedure. And so in our class, in the 8-hour class that's taught, we're going to teach you what a comprehensive retirement plan looks like. It takes 50 to 100 hours to build. And what you're going to learn is you've never seen anything like it. What you're going to learn is if you can have a plan like that, if you can find a team that can give you a plan like that, you're going to be able to retire earlier. You're going to be able to spend 6, 7, 8% per year withdrawal rates starting in your 60s, early 60s. You'll pay a lot less income taxes, and you will not have to change your lifestyle every time there's a short-term market event, which we're going to have major market events throughout your retirement 4 to 7 times. You won't ever, that's freedom. Control is freedom. You gain freedom is I don't have to change my lifestyle every time something bad's going on with the market or the country or geopolitically, or I don't like the president or the elections. None of that should impact your spending patterns and your daily decisions about finances and retirement. And none of you have that right now. And I can tell if you come to our class, you will have the tools to be able to find the right teams to give you that control so you can have those things in retirement.
It really comes down to, and I don't know who said this quote, and I should track that down. Intelligence versus wisdom. Intelligence is being smart enough to know the things you can do and how to do those things. And the wisdom is to know the things that you can't do and shouldn't do on your own. And the example I always give, you said it earlier, is working on a car. I am not mechanically inclined at all, to my father's great dismay. Yes. I can't do anything in a car. And so if my check engine light comes on, could I take it to AutoZone, get the code read, do some research, watch some YouTube videos, buy the tools, try and do it myself? I could give it a shot. And maybe I get it right. Or maybe I cut the brake line on accident and I don't find out until I'm driving down the highway, pumping the brakes and nothing's happening. And if that's the case, I'm in a lot of trouble. There's no do-overs with that. It's the same thing with retirement. There are no do-overs if you make massive mistakes.
That's the thing right there, Michael. It's like, this is different than when you're younger. You make a mistake with your finances, you just work longer, right? You save more. There's no fixing this. There's no do-over. You have to nail this. And do you want to have retirement with a sense of freedom, purpose, or do you want to have a retirement with a sense of fear and anxiety? We know 10,000 people, most baby boomers have retirement with a lot of fear and anxiety. We say it all the time. Older people aren't cheap. I know you all think as your parents' age, your grandparents' age, your great-grandparents' age, that they spent less and less and they were more afraid about money. They got more frugal. It's fear. My fear, our fear for you is not that you're going to outlive your money. I know that's your fear. That's not our fear. We know you won't outlive your money. That's not our fear. Our fear for you is that you're going to way underspend what you otherwise could be spending. You'll work way longer than you need to work, and you'll pay a lot more taxes than you need to pay because you refuse to spend 8 hours in a class. This will change your retirement, and you will wish you had gone to this 10 years prior. attend our 8-hour classes. I don't know how else to say this to you. We're a national charity. That's all we ask is a $29 donation to charity. Between that $29 of donations and donations we get from other people who have been through the class over the years is how we're able to continue to teach these courses and our partnerships with the universities. We are the proud partner of the University of Missouri. I'm proud to say the charity is. So these are the reasons we're able to provide these educational courses. We teach them over 2 evenings or one full long 8-hour Saturday. It's a long day. It's a lot of information. Be prepared. And if you aren't in those areas locally, we stream them live. So you can watch them wherever you're at. But if you are in the areas, I'm telling you, it's a big difference attending in person. You're going to want to attend this. All you have to do is make a $29 donation to charity. If you'd like to learn more, if you'd like to watch a webinar on what a sample plan, what we're going to teach you is, go to the charity's website. Go to retirementplanningedu.org.
Retirement Education Foundation is a fiscally sponsored program of United Charitable, a registered 501c3 public charity. Investing involves risk, including the potential loss of principal. Any insurance discussed in this show is backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Retirement Education Foundation is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Retirement Education Foundation. This radio show is paid for by the Retirement Education Foundation.